Amidst the seemingly most discouraging period for Tesla investors and bulls, there's a bit of good news to keep their hopes alive. Tesla's been facing serious issues with its stock price, inflation, as well as demand issues. However, recent data from the car company has shown a significant drop in Tesla's inventory for its Model Y in the United States. There have been some concerns about Tesla's demand across its market, but this recent data is proof that the automaker still has good demand for its cars. You definitely don't want to miss out on this one. Hey guys, welcome back to Tesla Tomorrow. While some investors like Morgan Stanley analyst Adam Jonas believe that Tesla is very likely to be experiencing demand destruction, some others are seeing Tesla facing unprecedented demand in the future. According to New Street Research managing partner Pierre Ferragu, Tesla's demand is way above what hopes were a few years ago, and electric cars are becoming so popular for Tesla and its competitors that market shares are likely going to be dictated by their ability to ramp up car volumes. The Model Y is one of Tesla's most successful cars, which as of October had reached around 879,346 units, compared to 906,032 units in all of last year. The huge sales surge for Tesla's Model Y underscores its attempt to ramp up production at its plant in Berlin, Germany, which opened in March and now produces around 2,000 cars per week. Tesla cars are doing well across its numerous markets, but does this mean there is no demand problem for Tesla? Let's find out, but before we do, if you like this type of content, don't forget to like and subscribe, and turn on notifications to keep up to date on everything going on with Tesla. In Q3, Tesla followed up a vehicle deliveries report that fell short of expectations with quarterly revenue that was also a bit lower than expected, and that left investors looking for a more clear-cut answer on the debate whether or not the automaker is starting to have demand issues. Tesla's CEO Elon Musk has a broad target to grow sales around 50% annually. While the company now expects to fall just short of this mark this year, most of Tesla's car models are performing well, incredibly well even, in its markets. In October, Tesla's Model Y passed perennial top sellers in global rankings, and according to reports, the car company sold around 200,000 Model Ys in that third quarter, bringing the total up to more than 500,000 so far. That means the SUV is broadly on pace to hit sales numbers enough to comfortably place it amongst the top 5 best-selling vehicles in the world. Likewise, the Model Y topped new vehicle registrations in Europe in September, according to market research data. This showed that the electric car is fast becoming a vehicle of choice in the region, and this is the first time that Tesla's sports utility vehicle has held the rankings in Europe, as 29,367 Model Y cars were registered, up 227% from last year. The Model 3 by Tesla also performed well this month, with about 3,878 registrations made in Germany. Both the Model Y and Model 3 represent just over 6% of the German car market, which is very impressive. And that's not all, the Model Y was the best-selling SUV in China in September as well. According to data from the CPCA, Tesla sold 46,694 Model Ys, which is about 41.4% increase over the previous sales from about a year ago. With this figure, Tesla was able to stay ahead of BYD Song, which took second place. This increase in car production is a result of a major ramp-up across most of Tesla's gigafactories. Model Y production has increased significantly at its factory in Shanghai, given the recent production line upgrades. One possible reason for the drop in Tesla's Model Y inventory in the United States could be the recent price cut for the car company in this market. Tesla recently cut prices of the Model 3 and Y in the United States, and that came in the form of a delivery credit for existing Tesla vehicles available for purchase. This price cut allows Tesla customers to get any of the models from Tesla's existing inventory for a cheaper cost than they would be otherwise. It also appears that Tesla's 4680 battery cell production line is gradually hitting rhythm. Tesla just announced that the battery team has managed to build 868,000 cells in the 7 days. This is roughly equal to the battery packs of over 1,000 electric vehicles. Tesla announced the milestone on its Twitter, and the EV maker highlighted its appreciation for its 4680 team in its post, while also including a couple of photos of the teams behind the milestone. Tesla's introduced the 4680 battery cell, and it came in about 2 years ago even. And since then, the automaker has been working to scale up production. This battery cell is claimed to be superior compared to the 2170 battery cells that Tesla currently uses. While producing enough cells for over 1,000 cars may seem like a minor achievement considering the scale of Tesla's overall operations, the accomplishment was likely achieved with just the company's initial 4680 production lines. And so, bigger production can be expected in the coming months. Does this mean the worst is over for Tesla? Well, probably not, since there are a lot more obstacles for the automaker to fight through. The company recently suspended production in China amidst rising COVID-19 cases in the country. According to reports, Tesla was already making plans to pause most of its work at its Shanghai Gigafactory in the last week of December, but the move comes ahead of that schedule that was already planned. The company gave no concrete reason behind that suspension. It had already reportedly cancelled the morning shift at the factory and told workers they could start their break. Tesla's Gigafactory in Shanghai is the automaker's most important manufacturing hub, which produces two of its best-selling cars, the Model 3 and Model Y, and so this could significantly affect demand for a while, and have Tesla grappling with elevated inventory levels as its second largest market has braced for a downturn. This could particularly affect local demand in the market since less cars are going to be purchased in the coming months. Tesla could, however, bypass this issue if its Shanghai Gigafactory has been focusing on manufacturing cars for export markets instead of prioritizing the local market demand. Interestingly, it was earlier reported that Tesla planned to suspend production of the Model Y electric crossover at the Shanghai Gigafactory for quite some time, and so the current production suspension could be a part of the automaker's planned production cut of around 30% in December 2022. Likewise, while Tesla's battery supply constraints have eased up over the last year thanks to suppliers ramping up production, a lot of the automaker's growth in 2023 is expected to be tied to its capacity to ramp up 4680 cell production. And so, although its recent production hit is quite an achievement, Tesla will have to do so much more to meet its future needs for the 4680 cells. During the company's Q2 earnings call, Tesla's Senior VP of Powertrain and Energy Engineering, Joe Baglino, noted that the company expects to ramp up the 4680 cell production to exceed 1,000 vehicles per week by the end of the year. He also noted that while Tesla's 4680 pilot line in Cato Road is improving its output, Giga Texas should overtake Cato's weekly production by the end of this year. Tesla seemed to have a lot of issues with hitting its volume production for these battery cells, and while a recent achievement could mean that the automaker has managed to work through some of the bottlenecks, it is not certain if it's going to continue to see a smoother ramp up from now. On the other hand, some Tesla bulls also believe that the automaker is performing well beyond expectations with the 4680 cells. According to a Twitter user named James Katz, who has been a critical viewer of Tesla's 4680 production in the past, it is easy to be critical against Tesla's promises from its fourth quarter in 2020 until we remember that Tesla also set aggressive timelines for itself. According to the Twitter user, putting everything into context and considering it objectively, the progress that Tesla has made on the 4680 is staggering, and people forget this is an entirely new business for Tesla and that battery manufacturing is not an easy business. The tweet wrote, "There's been a lot of very technical expertise required to build EV-grade lithium-ion batteries at scale. The top 5 manufacturers by volume control 77% of the total industry's output. And these players have been building batteries for decades. This is a highly consolidated business environment that requires a completely new supply chain. Think about what Tesla's done in 2 years. Although Tesla's still got a long way to go, these batteries are on track to reach volume production in a few years. But do you think so? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.